Next up, CEO of Scorpio Gold, Zayn, Kalyan, a name that I've been involved in for quite a few years now. And I've watched this guy just like go through it all, take the punches, keep raising money, secured some pretty significant capital, some pretty heavy hitters in the market, which I'll let him talk about. Great liquid stock. You're making discoveries. You're really executing on your business plan, Zayn. So with that being said, I'll let you fly through the 10 or 12 minute presentation.
No, appreciate that, Arlen. And yeah, I think you've been there since the beginning, very early, and really appreciate all the continued support. It's been a long road, just over 3 years, I guess, since I was first introduced to the Scorpio story and took over as CEO at the beginning of 2024. And I think we're finally in a position over the last, especially the last 6, 8 months, where things have we've really hit our stride and definitely kind of come into our own, and there's a lot of growth potential on the horizon. So with that, yeah, I'll just jump in the presentation, just given the amount of time we have. But functionally, we Scorpio is a late stage exploration story based in Nevada. We're located basically dead center between Las Vegas and Reno, Nevada, pretty much sandwiched between the historic Carlin trend and the historic Walker Lane trend, which is great because we have distinctive characteristics of both types of deposits, and that really does has led to a pretty exciting story where we're targeting a district scale opportunity. We're not targeting 2 million ounces. We're going for 3 to 5 million ounces at the very minimum, and we really do have a lot of conviction that this is a multi-million ounce system and has a lot of growth potential even beyond that. We're located 10 miles south of Round Mountain, which is the largest mine in Southern Nevada. It's Kinross's second largest mine in North America, and really does position us in a strategic way for a couple different reasons. And I'll get to those as we walk through the presentation. So goals and milestones over the next 12 months, very focused on scaling our 740,000 ounce resource at 1.26 grams per ton. With 50,000 meters of drilling, we're already about 12,000 meters through that program since we started in October of last year. But our goal is to scale our modest 740,000 ounce resource to a 2 million ounce resource by the end of this year. We have a pretty clear path to do so, which I'll talk about here in a minute. But ultimately, I think from especially a retail investor standpoint and just from an investment standpoint, period, we're very aggressively deploying capital. So we're fully financed through to the end of the year. We did a strategic placement with Ross Beatty and Eric Sprott in September of last year on the back of putting out our maiden resource. And alongside the exercise of nearly $8 million in warrants that all came in February and basically cleaned up our cap table, we're in a very strong financial position with some really big heavy hitters, as Arlen mentioned. Having the support of Ross and Eric really does put us in a position that gives us a lot of validation for the project ultimately. But beyond that, puts us in a strong financial position to continue to develop this project and move it forward. So 2 million ounces by the end of the year is our target. Alongside that, putting out a modern metallurgical study. This project has been mined consistently on and off since the 1950s. Metallurgy is by no means a fatal flaw. We have a lot of confidence in the metallurgy of this project. That said, doing a consolidated flow sheet for the entire project is a priority of ours, and doing it with our own material and to modern standards is key. So that is work that we're doing today, and we should have that report out by the end of the year. And then finally, evaluating or ultimately working towards putting out a updated tech report, call it end of this year, January 2027, with that 2 million ounce target. We've had a really good cadence of news since the beginning of the year. Every 2 to 3 weeks, we've been consistently putting out drill results. Had some great intercepts over the last, call it, month. Our goal is to continue that cadence. We put out some drill results this week on an entirely new target. It's roughly a 250-meter step out from the main resource. Very excited to hit mineralization or economic mineralization of over a decent width. On the first hole we drilled in a completely new structure. You can see that structure right here in the middle of my screen, which is this big black jasperite ridge. And beyond that, we're going to continue that cadence, keeping the market engaged by aggressively deploying capital. We have three diamond drills out in the field today. We're going to continue that through to the end of the year. Continue to put out results every 2 to 3 weeks. And with that, I'd also probably add that alongside that 2 million ounce target, our core goal is to maintain that aggressive exploration strategy. So if we're sitting here in November, December I would like to say that we have 5 drills or 6 drills out in the field, and that we're being even more aggressive in deploying capital and building out this resource. We have more than enough targets to explore. We have a lot of potential to expand the resource, and 2 million ounces is by no means where we think this thing ends. I think we're very convicted that we can build something truly world class in a part of the world, Nevada being one of the most exciting gold exploration districts in the world, and has a lot of interest from majors, mid tiers, and we're going to continue that path. Today we have 300 million shares outstanding, roughly sitting at 35 cents as of this morning. It's just over 100 million market cap. We 337 fully diluted. We do feel that we do accept that it is a fairly large structure, but at the same time, we are fully financed. We've had a lot of warrants been exercised, as I mentioned, and we're fully financed through the end of the year. Often a lot of questions come up as to how this opportunity exists inside Scorpio, really driven by the consolidation of the blue ground and the green ground you see here. The green ground was acquired from Kinross in 2021. The blue ground was what Scorpio has held since 2011. The consolidation of these two projects unlocked the 740,000 ounce resource that you can effectively see in the middle of the screen. But ultimately, this is a much larger system and has a lot more potential to expand. I often like to talk about how we stack up against our peers. I'm sure some of these peers actually presented here today, but maybe at least one of them. But grade and recovery are really key to differentiating the Manhattan project. When you combine grade and recovery, we really do sit in a position that's truly unique amongst other Nevada open pit resources. The average open pit grade in Nevada is 0.6 grams per ton. We're 1.26 grams per ton. If you're typically valuing a company or attempting to value a company on a per ounce in the ground basis, I think it's pretty safe to say that in today's market, you're probably somewhere between $100 and $200 US an ounce, depending on obviously team and a lot of outstanding factors around these companies. But typically, you're valuing these ounces just on a surface basis of an oxide ounce in Nevada. We're very confident that with this 1.26 grams per ton, we should be able to justify at least double what the typical ounce in Nevada is worth. And I think on that basis, we're significantly undervalued where we sit today, and ultimately where we believe this resource can go. We're very candid in our goals for this company. We are going to do everything we possibly can to de-risk this project in every respect. We're going to really package it up for a mid-tier or major to come in and acquire it. That's not to say that we're not going to work this project like we're putting it into development and ultimately through to production. We're doing everything we can from a permitting standpoint, from a engineering standpoint, from a geotechnical standpoint. We have so much understanding of this project from a kind of historical basis and have so much data to be able to leverage to work towards a PEA and all the data that would ultimately go into an FS or PFS. And we're going to continue to leverage that. We've de-risked this project from an infrastructure perspective with water rights, an existing 400 ton per day mill that has permitting value. There's so many aspects to what we have today that really set this up to be a logical takeout for a lot of different parties. Kinross being a pretty logical one, given that they sit 10 miles to the north of us, with a 12 to 16,000 ton per day processing facility that is with an ore body that's functionally at the end of its mine life. So we ultimately think that this is a very strategic play from an M&A perspective, but we are not naive that we do need to work this like we are ultimately going to build it and are doing so in every way we possibly can. How do we get to 2 million ounces? In the core resource, there was 400,000 ounces of uncategorized blocks that we were unable to include because the drill spacing was too wide. This is low-hanging fruit that we have one drill focused on today. We have a second drill focused on a new zone that was completely unlocked, which is the Zanzibar Trend. We put out the first intercept from the Zanzibar Trend, which is a completely new area off the main resource, inside the main resource envelope, but a completely new splay, completely new structure that's never been drilled. We put out an intercept of 3.1 grams over 49 meters, nearly 50 meters. It was an exciting intercept. We've continued to drill that structure, and we have conviction that there's a 200,000 to 300,000 ounce opportunity in that zone alone. So 400,000 ounces of uncategorized blocks that are being upgraded with one drill. 200 to 300,000 ounces in the Zanzibar trend. That is a core focus of where we're at today. And then third is starting to look at these historic resources that sit outside the main resource. This is Hooligan, Black Mammoth, April Fools, and Keystone Jumbo. Now, if you combine these these five historic resources, you get a 300,000 ounce resource that's 7.9 grams per ton. Now, 7.9 grams per ton is a pretty heavy grade, and it's overestimated just based on the method of resource estimation that was done. These are non-43-101 compliant resources, so I do caveat that. I encourage you to read the disclaimers on the slide if you want to learn more. But on that basis, we do have conviction that there is bulk tonnage opportunity with these historic zones. We've begun to drill Black Mammoth, and we put out our first intercepts from that hole last week. We have some further intercepts coming from the second hole that we drilled there in the immediate future. And we're very excited by the zone. It's a black jasperite structure. I'll just actually bring it up here on the map or on the 360. You can see it here. It's never been drilled, but it has a very tight density of historic workings across it. You can see historic workings here, all around here, all pits. And this has never been drilled properly. There's an immense opportunity. We believe that this is has lots of high-grade potential, and it sits right at the edge of our permitted underground. So not only does that present a interesting exploration opportunity where we can drill the structure from underground, and we've already begun to model that because our underground is fully permitted. It also presents an interesting development story for a potential mid-tier who would come in, or major for that matter, who would want to start mining, because they could immediately start mining the underground and continue to extend the underground into the Black Mammoth target if we're able to define a fairly substantial resource there, while you're permitting the building of the mega pit, which is ultimately contemplated by our MRE that was put out late last year. I often use this 360 view just to demonstrate the scale of the potential, how we're ultimately kind of coming to that conviction of this being a truly district scale opportunity. If you look at this picture here, you have a Gold Wedge underground mine, which has a historic resource, and you have 1, 2, 3, 4 pits, all in succession, all along this Reliance trend. And then at the end here, you have 2 historic past producing pits that produced in the 1950s and 60s of Keystone Jumbo. Ultimately, this is a nearly 6-kilometer trend. You have this Black Mammoth target that's never been drilled, has a very tight density of historic mine workings. As I said, we've already hit gold in mineralization with a recent intercepts that we've drilled there. And then beyond that, that extends out 2 kilometers, 2.5 kilometers to Hooligan, which again has a substantial historic resource and remains relatively underexplored from a modern perspective. We really just want to demonstrate that this has a lot of potential. And today, the 740,000 ounce resource with those 400,000 ounces on top of that of uncategorized blocks exists just in 1.8 kilometers of strike, which just exists basically in here. So ultimately, lots of potential. We're very aggressively exploring this, and we're going to continue to do so going into 2027 and beyond. I'll also just show this just to show kind of the scale and how close Round Mountain is. You can see Round Mountain in the distance here. Kinross has recently begun doing some exploration out in the Mount Jefferson caldera or canyon, just out in here, right actually almost up to our property boundary. So they are active in the area. They do realize that they need to find new ore for their processing facility there. They do hold a 2% NSR on half of our project, and ultimately there is a lot of blue sky potential there. I'll just show this here too. So this is the west pit. This just kind of show the scale of where the existing resource is. The bulk of the 740,000 ounce resource exists functionally right in here, and then out into Gold Wedge. So all in there. This is one of the areas where we're drilling right now, upgrading those 400,000 ounces. But the Zanzibar trend is a splay off the main resource, which functionally connects the Gold Wedge mill to this Mustang Hill historic mine. And we're currently drilling in here. That 3.1 grams over 49 meters was from a pad that was basically right here, drilling this way. We're going to continue to drill that target, and we have holes coming from that in the imminent future. Um, Again, this is just to demonstrate the scalability potential, not only along strike, but also at depth. You can see here that you have the existing resource, which bottoms out at 200 meters. We have confirmed mineralization with holes that we've drilled over the last 8 months that confirm that mineralization does exist beyond that 200-meter depth, exists to probably 350 meters at this point. We're going to continue to explore the depth potential. But ultimately, the main goal there is to show we have 740,000 ounces today at a depth of 200 meters from surface. We're going to continue to be able to expand that beyond that. I don't know how much time I have left.
You got about 3 minutes.
Perfect. Okay, so I'm a fairly young CEO, but backed by a very strong team. Leo Hathaway, who is the executive technical director of the company, alongside Harrison Pokram, our VPX, lead the technical team. Leo's had a very storied history and career with Ross Beatty, exiting 10 plus companies with Illumina Group, really with the same sort of strategy as to what we're applying here, which is package up large scale resources with lots of expandability potential for majors and mid tiers to come in and take through to development, and de-risking them in every possible respect in every way that we possibly can. I would say that the biggest de-risking factor of this project, not only beyond obviously the fact that there is mineralization, there is a resource, is the fact that we have water rights. And water rights in this part of Nevada are very key. We're one of only 2 companies in the basin that have these water rights. So it does make our project very unique amongst its peers. And those water rights are enough to support, the current water rights we have are enough to support a 100,000 ounce a year producer, 6,000 ton plus per day mill. Beyond Leo, Charles Funk, who's the CEO of Helistar Metals, is a mentor to myself, was one of the instrumental in pushing me to take over this company and seeing the opportunity with what existed at Manhattan very early. And then Daniel Coons, who's the CEO of Ivanhoe Mines, was again very early in seeing the opportunity with Manhattan. And him and his team were very supportive in understanding the resource and the expandability potential of what we have there today. There's 4 things we can all on this presentation on. 1, position for growth very aggressively. 2, fully financed to do so with the support of very storied and strong mining investors and entrepreneurs, Ross B and Eric Sprott, prime among them. And then 3, that our grade is very unique. It does position us very well. That combined with metallurgy that's fully amenable to cyanide, great recoveries from kind of a first pass of just gravity alone, 70+% from gravity alone, and then 90+% from a full mill circuit does make this does position this with immense economic opportunity. And then finally, being located next to a 20 million ounce historic mine with Round Mountain, ultimately just positions Scorpio in Manhattan, and Scorpio for that matter, in a very very fortuitous position in what we hope will continue to be a great market. So ultimately, thank you.
Great. Great job, Zayn. Super cool. Like, I was on this project a couple of years ago, probably to this day, almost. It's kind of cool just to see those pictures that you did and see how much you advanced this asset. It's fantastic.
I appreciate them.
Just a couple quick questions. We don't have a ton of time here. Who's covering you on the analyst side of things?
Yeah, so today we have some not formal but minor coverage by Pierre Valancourt at Haywood, and then our core coverage is from Velocity Trade Capital.
Yeah. Okay. And then water rights. That's super key in Nevada. I think one thing that Nevada people are going to struggle with is getting water rights, and really, really valuable. Like, who bought the Bullfrog deposit down there, and like they ended. Yeah, right. And like what they paid per ounce really was like probably a function of the water rights, right? Like, because it's just further de-risk. So I'd love to explore that more with you, but we don't have time. I'll forward off some of the questions that we got from our audience for you, Zayn. If you can get back to them, that'd be great.
100%. No, definitely appreciate the time and opportunity to present today, Arlen. And as always, it's a great forum and really happy to be here.
Awesome. Thanks, Zayn.
Thanks, guys.